Hi, good afternoon. Welcome to Midcap Radar. I'm Samira Abdi and with me is my colleague Prashant Nair. Well, so far, good going for the market. The key indices at the high point of the day. So it's almost about 1% in terms of a gain for the frontline indices. So the Nifty is looking strong above that 11,000 mark, which it reclaimed in early trade. And now well above it. The Sensex too just shy of 37,000. The only blip, though, remains the mid-cap index. For the second day running, the mid-cap index sees a fall. And a lot of these, vulnerable stocks actually pulling it lower. Hi, Prashant.
Samira, hi. And I mean, you look at the market breadth, it's improved a little bit, but declines still outnumber advances. Market which is up 105 points on the Nifty. So that, I mean, has to tell you something. And it has been this way now for the last, 4, 5, 6 trading sessions. We've had 3:1 declines outnumbering advances and the Nifty ending higher. Narrow and narrower essentially is how you'd describe any of the last so many trading sessions, and today is absolutely no different at this point in time. I mean, take a look at the stocks which are pushing the Nifty up. Reliance, ICICI Bank, there is HDFC Bank, there is Kotak Bank. It's the known suspects, just a bunch keeping the market high, whereas the broader market still under a fair bit of pressure. Although I must say, even as compared to the first half, the market breadth has become a little bit better. It was, clear 2.5:1 or so. The gap is closed as we speak. Let's quickly look at European markets as well. Very briefly, how are things opening up there? So we've got the FTSE and the CAC, which are down about 0.25%, 1/3% each. So it's a subdued start at this point in time. Things may start to change, pick up, but for now, the start is not very encouraging. Okay, Ashwini is with us to run us through what he's making of things. Ashwini, first up, your view on the Nifty and then a word on the broader market.
Well, the reason for that market breadth is that there are 5 TV anchors and 5,000 of us traders who are trying to trade the Nifty back and forth. There is zero interest from any sort of retail or smaller player or players who do these sort of stocks. But, we have to make do with what we have. So chances are that you could have a bit of extension of this crossing of 11,000 and a bit more participation while we are above that. But overall, again, it'll be a 3-leg pony with 1 leg not working. So my sense is by the end of the day, we should continue with this rally. And it'll be a slow 30-40 point Nifty rally per session. But basically, we are getting dragged along with the globe where there are triple-digit rallies on a daily basis. Having said that, VIP Industries are buy with a stop of 507, target of 525. Bajaj Finance is a buy with a stop of 2640, target of 2710. And Chambal Fertilizer is a buy with a stop of 162, target of 174.
Ashwini, I don't know about interest, but I think there is a fair bit of interest. It's just that there is no buying, right? Otherwise, it's just sideways.
That is interest, right? You show interest with money. If money was coming into mid caps, they wouldn't be going down. For so many days and so many sessions, 6.5% down just this year on mid caps.
Absolutely. Even within the Nifty, it is, I think, 5 or 6 names, as we've been highlighting, which are contributing to 70-80% of the up move we've seen so far this year. Ashwini, thanks for your time. Appreciate it. We'll chat up with you again at 2:30. 105 points on the Nifty. Numbers have been coming in. Muthoot Finance numbers are at the bottom of the screen. And we also got numbers from Greaves Cotton earlier. Samira.
Yeah, actually, just to go through Muthoot Finance numbers, net profit has come in at 485, which is a tad below what our own poll had thrown up, which was a number close to about 500 odd crores. The expectation was there that, there could be some bit of contraction also in the NIMS. Cost of funds has been going up. Nevertheless, we're still to get the NIMS number, but finance costs has shot up as well for them. The net interest income, looks pretty decent actually. Sorry, the top line growth for them looks okay. That's a growth of about 9% odd. But let's see in terms of loan growth, if it is above 15% odd, it would be seen as positive. Greaves Carton also came out with numbers. They're largely in line. Top line growth has come in above estimates. Margins appear to be a tad bit under pressure, though on a Y-on-Y basis, there has been just a tad bit of improvement over there. Nagesh Basavnhal, the MD and CEO of Greaves Cotton, now joins in. Hi, Nagesh. Good afternoon. Thanks very much for joining in. Could you take us through your operational performance this time around? What's the outlook now, in terms of improvement in margins for the rest of the year? What's the outlook for FY20?
Sure. Thank you. Thank you for having me. Like you said, I think we just announced our Q3 results. Revenue on a quarter-over-quarter was up 13%. Revenue for the year-to-date was up 12%, right? On a EBITDA, we were up plus 14%, and year-to-date, we were up 11%, right? In terms of clearly, all of our industry has faced commodity inflation over the last couple of quarters. But thanks to a lot of operational efficiencies, I think we were able to really reduce that. And when you look at our numbers, I mean, our EBITDA growth as well as PAT before exception, I think you can see where kind of we've been able to largely normalize that. Going forward, I believe we are looking forward to the continuing trend of the new businesses gaining traction. Our new business that we had initiated over the last 2.5 years per the strategic business plan is gaining traction.
Okay. What about commodity pressures? Are they looking to ease a little bit? We still are seeing another couple of quarters where we will have pain, but we do believe that largely there has been some improvement in certain categories, but in general there is some more pain for a couple of quarters. But clearly we continue to press the pedal when it comes to operational efficiencies or in selected price increases where possible with customers to kind of normalize that or neutralize that. Sorry, go ahead.
Right. So just a quick point from the cost inflation front to the demand itself, especially the auto sector. I mean, as a user industry, has your assessment for, how much you can sell to that industry changed from, say, even a quarter, 2 quarters back? Because we have been seeing pretty divergent trends within the sector. January has been a little better, but December gave us grave doubts.
Yes, I think the overall slowdown post-Diwali, I think a lot of the industry felt. But thanks to our strategy and our diversification strategy, right? So in addition to automotive engines, I think we got into non-automotive small engines. We got into our Greaves retail, where we today have 250 outlets across the country. Our Ampere electric business is growing. So when we look at multi-brand spares, Greaves retail, non-automotive sales, that helped us offset some of the slowness in the automotive side. And of course, along with our farm business and genset business, which has been growing in significant double digits over the last couple of quarters.
But could you provide us with an outlook for the automotive business?
So the automotive side, we believe, like you said, the first 2 months are looking decent this quarter. And we are optimistic that fourth quarter will be better on the automotive engine side as well.
You said 9-month revenue growth is at 12%, right?
Yeah.
How much could you end the year with, and what will FY20 look like?
So as you can see, this was about 1460, right? I mean, plus 12% on a 9-month. And then when you look at it, this was a 7th quarter in a row, that we have grown consistently. And and at double digits. So if you looked, I would expect that our growth momentum, largely backed by our strategic plan, largely backed by new businesses, we are pushing all the levers to kind of make sure that the momentum doesn't slip. So that's kind of, while I'm not going to give you a number right now, but we believe that we are quite optimistic with what we are seeing for the fourth quarter.
I'm just going to come back to that automotive piece. Could you give us a breakup between 3-wheeler engines, 4-wheeler and 4-wheeler engines?
So clearly, a lot of our revenue is coming in from the three-wheeler right now, and so I think if you look at it on a volume basis, we did better than last year. Then we were also able to get some price adjustments for commodity and stuff like that. So I think our automotive business also grew. By the way, automotive engine business did grow, and that was in single digits, whereas our farm, aftermarket, genset, some of the newer businesses grew in significant double digits.
Okay. Automotive total is what percentage of your revenues and
it's
profits?
roughly about 50% of the revenue. Yeah.
Okay. And as a percentage of profits, I mean, if you were to divide,
it's a little bit higher.
It's a little bit higher. And you're saying that the 2 months are good, so the fourth quarter should be better.
We're cautiously optimistic about the fourth quarter, yes.
If there is a further cost inflation, given how the underlying demand situation is, which is a bit cautious, would you be able to pass on these increases?
So obviously,
would you be able to take price increases? Yeah.
Yeah, we have taken some. We are in the process of taking some more price increases. So clearly, we have annual contracts with our OEs, and we're going to keep working on that, right? And also in the other industries, whether it is a genset or farm industry, we are obviously evaluating that. So at the end of the day, between that as well as operational efficiencies, which we're really pushing hard, we believe we're going to be more or less in line with where we are this third quarter.
Okay. Thanks very much. Appreciate you joining in. Good luck, sir. And thanks for that clarity. All right. 103 points on the Nifty. 11,038 is where we're at. So the broader market is doing better. Maybe we could just come back and look at
the Graphite India numbers, Prashant, looking quite good actually, to be honest. And we should pull up the stock as well. I think the stock is coming off a little bit. Maybe it's just a factor of, how much these graphite stocks have gone up. But the revenue has gone up about 81% odd. The net profit at 700 crores plus looks good. There is an other income element as well. But look at that operationally as well. Things are looking good. It's almost doubling of the EBITDA that they have reported this time around at 1,000 crores plus. So for now, I think these numbers would look good.
I'm looking at the price on graphite. The stock's basically halved in the last 5 months or so. I mean, the price was 1,000 plus. Stock's at about 500 now, 530. Reacting to numbers and EBITDA margins, etc. I mean, the numbers look pretty. The growth seems pretty strong on Graphite India third quarter results. We'll have more details for you. Maybe we'll try and speak with the management as well. Leaving you with, just wanted to mention Jubilant Foodworks stock as well. I mean, it's recovered almost 35 rupees from the lows, and it's a comeback as we speak, 1277 or so. It had gotten to about 12, I think 1250, 1245. So there is some pullback there. We take a break. We come back and we get you that exclusive conversation with the Thermax management on expansion plans, industry outlook on the other side.